If you're going to have a successful investment journey and a successful outcome, then you need to have these three things in place. That's what we're going to discuss today. My name's Nate. I've been around the investment world and investing for 10 years plus now. I'm a popular investor on eToro. If you're looking to get started and not sure where to get started, eToro is a great platform. Comment below. I'm more than happy to talk and help you get started. As always, this is not financial advice. These are just my thoughts, okay? Random guy on YouTube. Now, let's dig into what these three things are. The stock market will go up and down. Everyone knows that, but everyone tends to think, well, when they get in, it's going to just go up. But no, oftentimes you're going to be hit with a challenge right up front and it's going to go down just after you get in. For some reason, that's just the way it works. It's going to really question you, be like, are you serious about this? But if you have these three things in place, you're going to be fine because we're in it for the long haul. The first thing is your consumer debt. You need to be completely debt-free of all your consumer debt. This is not things like mortgages. This is things like your cars, student loans, credit cards, personal loans, loans to family members, things like that. That needs to be all paid off before you get started investing, because those payments each month are chewing up what you're going to use to invest. So step one is get rid of your consumer debt. Pay it off as quick as anything. You're looking for good returns. Your credit cards are like 18 to 24%. They're a great place to start and get some good returns by paying those off and clearing those debts out. The second is to set up an emergency fund. This is not investment. This is just quick funds that you can access in the case of an emergency. 3 to 6 months of living expenses. Emergencies will happen. It's usually what somebody will face a serious financial situation every 10 years or so, within a 10-year period. And so emergencies will happen. Have an emergency fund set up. This is insurance that protects your investments. It will protect you from having to sell your investments at the time that you don't want to sell them and get out in order to pay for something. And so 3 to 6 months of living expenses. So whatever it costs you to live, calculate that, find out the monthly cost. Go 3 times, 6 times, discuss it. You decide, okay? But have that in a bank account that's easily accessible and sitting there. And then the final one, now after this, you're ready to get started investing. The final thing with investing to make sure it works and is successful is consistency. You need to be consistent in your investment journey. And so what I mean by that is every time you get paid, you need to have a percentage that you're going to take of that paycheck and be able to put it into investments and be able to invest it every time you get paid, whether it's weekly, fortnightly, monthly, whatever it is, but have a percentage of that you can put into investments. You don't want to invest 1 paycheck and then miss 2 and then invest 3 and then miss 1 and then invest 2 paychecks and then miss 1. You want it consistent. You want it like part of the rhythm of your life, and you want to be consistent. And so this also plays into cash flow. So you want to invest out of the excess, out of the extra things that you were making in car payments and stuff like that. You want to invest out of the extra, not out of money you need to live on. Otherwise, you're going to be pulling it back out to live. And so it's out of the extra, and it needs to be something that you're like, yes, we can do this every paycheck. Now, you may start off a bit smaller and grow it over the course of 6 months, and you're like, okay, we can actually invest a bit more. Let's grow that. Or you may taper it back a little bit because it's got to be regular. Every paycheck has got to come out of the excess, not out of money you need to live on. If you do these 3 things, you're on your way to being a great investor. They're the first steps before you even talk about what do I invest in? What should I buy? Should I buy this or that, or ETFs or stocks or crypto or currencies or indexes, whatever, that's the second part. But most people go to that part before they even lay the foundation. And this is the foundation, these 3 steps. Pay off your consumer debt, set up an emergency fund, and discuss an amount that you'll be able to invest every paycheck consistently. It's not going to fluctuate. It's going to be consistent each paycheck, whenever it is that you get paid. Hey, if you like this video, give it a thumbs up, share it with people. Subscribe if you haven't already. Thank you to all those that have subscribed. And if you have questions about investing or personal finance or anything like that, leave a comment below. As always, as I said at the beginning, remember, this is not financial advice. These are just my thoughts. These are things that I've done, that our family does, and it works for us. We'll see you in the next video.